So this brings us to the last session of the day. And this portion of the event is dedicated to hearing from you, our shareholders, about the topics on your minds. Thank you to all who have submitted questions. If we are still seeing large volumes of questions coming in at the end of the session, we will continue up to 1 p.m. to ensure we can answer as many as we can. So let's get started. Tom, Lawrence, thank you for joining me. If I start with the question that has been most popular, it is on the theme of AI. So Tom, maybe I'll come to you with this very simple first question. AI, is this a bubble? It feels there's similarities to the dot-com era. Can you give me your thoughts on that topic?
Well, what we're seeing is a huge amount of capital investment that is people building data centers to deliver this capability. And the numbers here are huge. So if you take the biggest 4 American spenders, their capital investment this year will be about $400 billion. So to give you some context for that number, UK total fixed capital formation is about $600 billion. So that's all the money spent on capital investment by all companies in the UK, and just 4 US companies are spending that much money. So there's a huge investment going in. Yep. Those numbers look massive in every context except for the cash flows of those companies that are spending those dollars. And it's being driven by demand. There is huge demand for this compute. We are undersupplied by compute. We're seeing very rapid revenue growth at the biggest companies that are supplying these AI services, but that growth would be even faster if they could get their hands on more compute infrastructure. So I think the definition of a bubble, or one definition of a bubble, is that you're having these huge amounts of money spent with no clear path to making a return on that capital investment. And I just don't think it's clear at this point. There may be overspend, but the thing about these huge organizations is that they can repurpose that capital equipment to do other things.
Yeah.
And most of the companies that we own are not deploying this capital, I guess is the final point to make on this.
And then maybe just sticking on the theme of AI, Lawrence, there's been a few questions come in just trying to understand how much exposure does Scottish Mortgage have to this theme in AI? Because there's a lot of comparisons to Scottish Mortgage being a tech fund, but just maybe talk through what exposure we have to the AI theme, if you like, in the portfolio.
I think it's multi-layered, the exposure we have. So if you start at almost the beginning of the supply chain, we have good size holdings in the companies that are enabling these chips to be built. Mm-hmm. TSMC is responsible for making 90% of the world's advanced chips, and it's one of Scottish Mortgage's largest holdings. Whatever happens in technology, whether it's NVIDIA's chips, whether it's AMD, whether it's a new form of chip, it's going to be made by TSMC. Yeah. And so that's an incredibly important choke point in the semiconductor supply chain. And then we own ASML that produces and has a monopoly on the most advanced lithography machines in the world that TSMC buys, that allows it to make the chips for the world. And it's not just AI, it's compute generally. And then you move into, obviously you've got NVIDIA, the designing the graphics chips that are being built. And then you move into the infrastructure layer. 70% or so of Amazon's profits today is Amazon Web Services, and that's about providing compute services, part of which is AI. Databricks, Snowflake, lots of other companies also enabling AI. And then you have the application layer, and that does start to get really quite broad. You have companies like Shopify that are adopting AI in a very serious way to massively improve their proposition to merchants. But then I think you have AI as a tool set that every company is able to use. But I think it's the fact that we own companies that are ambitious, founder-led, technical, and because they're digital, have a lot of data, and they have it well organized and stored, and they can use that data to plug into large language models and get either better products or save revenue out of, or save costs out of. And so we talked earlier to Mercado Libre, AI is helping improve their business massively. And so you're seeing that across the portfolio. Mercado Libre's future is not dependent on AI, but it is making their business better and more profitable in the long run.
Perfect. Thanks, Lawrence. And just shifting gears a little bit, Tom, someone's written here, great session about space, but what about the valuation of SpaceX? Is it going to grow enough to justify that valuation?
First of all, thank you for saying it was a great session. So the last valuation point we have for SpaceX was about $400 billion of market capitalization. The way to think about the valuation of SpaceX is to think about Starlink. Chris Hadfield said that if you looked at the funding for what they were doing in the launch business, it's coming from the satellite broadband business. Now, Starlink exited last year with 4.5 million subscribers. I think Elon has gone on the record recently as saying they now have 7 million subscribers. So I don't think, simple extrapolation, but I think we can probably say they'll exit this year with about 9 million. So you've got 9 million subscribers growing at 100% annual growth rate. Now, simple maths on that, if you say $75 a month for the service, 12 months a year, that's what, $8 billion of revenue growing at 100% per annum. Now, it's $1 trillion market, broadband, provision of broadband. So they have less than 0.5% of the market. And the technology is getting better, the technology is getting cheaper. Part of what's driving that growth is that the antennae have gone down substantially in price. They're moving not only from broadband, but into direct to mobile. So you make your own assumptions about where that $8 billion of revenue that they're going to exit this year is going to go to. But if you add in a couple more doublings and make a reasonable margin assumption, it pays for the whole of SpaceX. And then you have a monopoly on launch. And we just heard how launch is going to cheaper launch is going to radically transform what's done in space, how attractive it is, how much activity is going to go there. So, to my mind, you're getting that business for free at this point.
Yeah, great, thanks, Tom. Maybe shifting towards the news earlier this year in April and the trade wars and the tariff announcements, which feels like it was only a matter of months ago. Now there's very little commentary. So somebody's writing in, is this vindication of your comments that all news will always cycle? And then sort of following on from that, there's questions around TSMC and the geopolitical tensions between Taiwan, China and the US, just some of your thoughts. So maybe Lawrence, I'll maybe ask you to take that just in terms of how we're viewing the current landscape and implications on some of our holdings.
Yeah, maybe I'll start broadly and then go narrowly to TSMC. I think as a fund manager, you have to be quite careful what you react to and what you don't react to, where you have insight and where you don't have insight. And I think when the trade wars, Liberation Day happened, we looked at the portfolio, and if you go through the exposure, we don't have that many companies that make stuff in one place and export it to another. We've got a lot of digital companies, and then even with the companies that make and export, a lot of what they do is a unique product. It can't be replicated. And I think TSMC is an example of that, where it's got various exemptions. And indeed, the US have been paying effectively a lot of money for TSMC to set up very large plants in Arizona, because this is a unique bottleneck and they need to work with TSMC. They can't work around them very easily. As you move to the China Straits, one of the reasons that you're able to purchase a company with the profile that TSMC has of sort of compounding earnings and revenues at around 30% for a very low valuation is people are worried about the Chinese Taiwan Straits issue. There's some validity to that concern, but I think what you see in markets is that they want to price in the discount to TSMC, but they don't price in the discount to NVIDIA, to Apple, to every company that relies on its chips. And so that becomes an interesting disconnect, that actually that would be something that would impact across the economy, but you're only penalizing TSMC for it. So we think the risk reward therefore starts to look very attractive. And on top of that, TSMC have been very aggressively building their factories in the US, Germany, Japan. And so over time, the proportion that depends on Taiwan will very slowly go down as well, limiting that risk.
And it's now one of our top 10 holdings in the trust as of the end of last month. So a lot of conviction in the name still.
Yeah, and it continues to perform very well.
Maybe just, Tom, coming back to you. The topic of China, there's a few questions coming here. What's next for China? What are the one or two things the team are hoping to learn and build into in that region? And Tom, you were obviously out in China a few months ago, so maybe why don't you have a crack at that, what we're thinking on China right now?
Yeah, I mean, that's a huge question. What next for China? I think just go back to some of our contentions about what's going on in China. It's been a difficult place to invest over recent years, but it's one of the few places in the world that we see innovation at scale in a way that matches what's going on in the West Coast of America. It's an economy which has some phenomenal advantages in certain key technologies. Electrification would stand out there, and you've got this combination of a really large domestic market, really great entrepreneurs, and really important strategic leadership in key industries. So this is 20% of the global economy. You can't ignore it. It's a smaller proportion of the market today, but I think that's misleading. What are we doing? Well, we've made some new purchases in China through the first part of this year, and I think they capture exactly some of those things. So we bought into CATL, which is the world's leading battery manufacturer. This is a business with a great track record. We were able to buy it at a very attractive price. We think that it can go on to have very big market shares across the globe because it is just so difficult to compete and address the technological lead that they have today. Get into that more if people are interested. We also bought Xiaohongshu, which is a social media platform in China. It has a huge audience of wealthy urban young users. And I think it's a new way of accessing the web. It's displaced Baidu as the leading portal onto the internet in China. And I think what it represents is possibly a window into the future in the way that internet usage is going. And so we think we need to be there and learn from what it is that they're doing. And where we can find companies like that, where we think that we can make a return that justifies the geopolitical risks of investing in China, we're very happy to do that.
And Tom, I need to stay on you because somebody's just written a question in, should I trust autonomous cars? And I know firsthand that when you're in China, you actually firsthand experienced some autonomous vehicles. So maybe just talk about your experience in that area as well.
Sure. So I rode in three different companies' autonomous vehicles through downtown Shanghai and Beijing. I've driven in Google's Waymos. We have an incredible company, Wave, here in the UK, who are doing this in London as we speak. The challenge here is that these things are already very safe. But how, as a human, can you judge the difference between something that's accurate 99.99% of the time and one that's accurate to 6 or 7 decimal places of nines? And I think it's actually traveling along that safety curve that has delayed the deployment of this technology. We were excited about it 5 years ago, 10 years ago, but it's that continued improvement to these exacting safety requirements that's delayed the run out. I think we're getting there. If you take the example of Google's Waymo, it's now doing hundreds of thousands of rides a month in San Francisco. It's spreading out rapidly into new cities. If you take Aurora Innovation, which is an autonomous trucking business that we own, they've launched commercially on the roads in Texas. So we have now reached the point where the safety of these vehicles is such that it's well beyond that of any human driver, and it's ready for prime time.
So you're still here to tell the tale, so we can trust some of these new technologies.
I think one thing that maybe the story illustrates is this is going to be a much more competitive market in China. There's actually a relatively small number of players across everywhere else in the world, whereas China, there's a handful of really credible players that are going to really drive this forward quickly.
Yeah, no, absolutely. Somebody has written in, I see a company called PsiQuantum in the list. I've never heard of it, but then again, I'd never heard of NVIDIA until relatively recently. So Tom, you can thank me later. Lawrence, you can take the very easy task of talking about quantum computing. So do you maybe just want to give a quick summary of what is PsiQuantum and why we are excited about this company that people maybe have not heard of?
So PsiQuantum is a small holding in the trust. And I think earlier we spoke about having a low bar to getting in what could be the next generation of winners. And PsiQuantum is early on the journey of potentially creating an entirely new computing industry, built around quantum computers using its photonic approach, and is showing to have some real signs of success in terms of, I think they're building the first utility scale one in Illinois. We've got a contract in Australia, so there's some good proof points coming through. Quantum computing could be really impactful because it allows you to solve different problems radically quicker and easier than classical computing. So I think one of the examples we've been given in the past has been, it's like solving a very complicated maze where a classical computer would go through each sort of line on its own to try and find the answer. And for a really complicated maze, that's going to take a long time. A quantum computer can simultaneously effectively explore all paths at once and get to the answer much quicker. That would be the simple analogy of how they work. And that offers massive leaps forward in encryption and massive leaps forward in also the ability to predict natural and biological processes, to do chemistry batteries and various other things. So it could be a very large industry if they're successful in building it.
Okay, thanks, Lawrence. I'll maybe just stick with you, Lawrence. An interesting question, which we actually get quite a lot, but it's on Ferrari and Hermes. So somebody's written in, Ferrari and Hermes are clearly great companies, but they seem to be a bit different to some of the other themes. Why do they merit a place in Scottish Mortgage?
Yeah, I think that's a fair question and a good observation. They are different types of businesses. And I think what we're pursuing is outliers, but we want to be open-minded about the types of companies that can deliver outliers. So I think if you look on one of our charts, it will show what are the top returning stocks over the last 10 years, and Ferrari will be in there, about a 12 times return over the last decade. So it's delivered an outlier outcome, perhaps from an unlikely place. But I think what allows that to happen is when you have a truly iconic brand that has pricing power that allows it to grow revenue steadily with pricing, to continue to improve its margin, and also greater recognition of the quality of this business. And I think it's a strong reminder that outliers can come in many shapes and forms. It can be Xiaohongshu, which is a very young company, or it can be an 85-year-old company that's been going for a very long time but has an advantage built on decades of racing history and heritage.
Perfect, thank you, Lawrence. No Scottish Mortgage session is ever complete without a Tesla question. So Tom, to you, is Tesla in trouble or will it adapt as it always has?
Well, the market values Tesla at close to $1.5 trillion, so obviously does not think it is in trouble. I think that the calculus for Tesla has changed, and we made significant reductions to our holding at the tail end of 2024 to reflect that. And why it's changed is that they don't have a plan to release lots of new passenger cars. The release that we've had just this week of the lower priced Model Y and Model 3 came in place of a previous plan to reduce a much lower priced model. And the reason is because Tesla management have decided that there isn't really a future in passenger cars, that the future is autonomous and electric. And they are all in on that bet. And that, of course, is as a long-term holder of Tesla, that's of course the path that they've taken at every juncture. So to own Tesla today, you have to believe that autonomy and particularly robotaxi will be a big success, and also that the suite of technologies that underpin that is going to enable humanoid robots. And if you believe those two things, then I think you can make a lot of money in Tesla. Our judgment was that you were paying a lot for that opportunity up front, where there's still a number of proof points to come, and so we very substantially reduced the holding. But we've kept a small holding, and the reason is that there is a lot of evidence that it's a bad idea to bet against Elon Musk.
Okay, perfect. There's been a couple of questions on the news around the NVIDIA OpenAI collaboration. So the question is around how does it impact the NVIDIA investment case and competitive advantage in your opinion?
Why don't you do NVIDIA? And I just want to touch on this point about the collaboration, because I think one of the factors that's driving these question marks about whether we're in an AI bubble is around the contracts that you're starting to see and the collaborations between the players. So NVIDIA is investing directly in OpenAI, conditional on OpenAI investing in NVIDIA's chips. And you saw a similar recent deal with AMD, where OpenAI is investing in AMD and signing a contract to buy AMD's chips. And you know that when you provide your customers with capital to buy your product, that's known as vendor financing. And that was a phenomenon that was prevalent in the late 90s in the dot-com bubble. And I think that's one of the parallels, one of the links that people are drawing between the two situations. You know, there are parallels, and then you have to think about what are the differences. And we talked a little bit about that earlier. So that's the collaboration. And Lawrence, do you want to take NVIDIA specifically?
Yeah. I suppose one approach to trying to explain it would be to say, 18 months ago, when we were talking to companies that would be using AI powered by NVIDIA's GPUs, there was, I think, a degree of uncertainty of, will you ever be able to get a really effective ROI out of that? Yeah. A lot of them were experimenting, return on investment. Yeah. A lot were experimenting on it. They weren't doing it at scale. They weren't saying this is going to change our business. You know, look out for what we can do in revenue generation or cost cutting over the next 12 months. What has changed this year when we're talking to companies is every company is saying, this is how we're using it, and this is how we think it's going to impact our trajectory over the next few years. And we're using it at scale, and we think it is meaningful to the overall outcome of our company. And so what you're seeing is that people are saying they are very much getting a return on investment now. And that is underpinning the opportunity for NVIDIA. Almost every company that we are talking to is telling us this. And when you think about what NVIDIA are offering, it is to offer intelligence to companies. And if you can offer that at the right price point, companies are always going to want more of it. So there is a very large market. Now, I think there is still a question that when we come to the investment case, we see this huge opportunity. We also see a $4.5 trillion starting point valuation. Yeah. And so one of the reasons we've reduced it is, and this may turn out to be, quite frankly, our lack of imagination, but plotting a course to a $15 trillion market cap from here for us is very challenging. Do we think you can still make money from here? Yes, but not the same level of upside that would warrant it being one of the trust's largest holdings. So that's what's generated the reductions. We still see a very good path for the business, but it's just being true to what we say of we're looking for outliers that can deliver a multiple return from here. And with NVIDIA, that's become more challenging as the valuation has risen. Okay,
perfect. That's really helpful. Lawrence, maybe just sticking on this theme, somebody has written in, have you avoided investing in large language models for a reason? Well, I guess we can answer that now. Tom, maybe to talk about one of our newer purchases in the portfolio.
Yeah, so we haven't invested in large language models. So these are the systems that underpin some of these AI products that you see today. And it's effectively a massive computer system that you train and then you deploy for whatever end purpose you have. Now, the reason that we've been cautious about investing in these things is that there are a lot of people trying to build them, and there was relatively little differentiation between them. So some of these names might be familiar, but you have ChatGPT, you have Claude from Anthropic, you have Gemini from Google, you had DeepSeek, which was a Chinese competitor, and the capabilities of these models seem to, whoever had the latest release would leapfrog the others, and huge sums of capital going into being invested to train these models. So very capital intensive, limited differentiation. That was the hypothesis. And I think what's now become clear is you're starting to see applications, and consumer has been the first one, the chat personal assistant, and OpenAI and ChatGPT.com has become the 5th largest website in the world. You've seen a real distribution edge emerge there, and I think that's a really interesting area. We don't invest in OpenAI. The second use case, which has really taken off, is in writing software. And that's a really interesting use case because these systems are really good at writing software. You constrain the complexity of the task that you're trying to achieve. Software development capability has been a real bottleneck for many companies, and it really underpins the modern global economy. So Anthropic have been the leader in that area, and they've talked about very rapid revenue growth on the back of it. They came into this year with about $1 billion run rate of revenue. Went into the second half of the year with close to $5 billion revenue run rate. And so we've invested in that company pretty recently as a private investment, and it reflects that you're starting to see this leadership and use case in a very valuable segment of the market.
Perfect, thanks. Helpful. Tom, maybe just sticking on privates and linking into another question. Somebody has asked here, if banks present challenges to analyse, are digital banks any different? Now, of course, one of our new buys this year has been Revolut. So Lawrence, maybe do you want to talk through our exposure to digital banks and how we're thinking about the investment opportunity in that area?
Yeah, so I think banks can be very difficult to analyse. But I think the starting point, one, would be that what we're seeing from these neobanks that don't have branches, but are leveraging technology to serve the customer, is you're seeing some quite profound competitive advantages. The first is just the lower cost ability to serve. So because they don't have thousands of bank branches, they don't have tens of thousands of employees, they can serve people much more cheaply. The second, and it's partly cost, is that they don't have as much legacy IT infrastructure that's been built up over decades of mergers. That's partly a cost, but it's also partly a capability, that there's often a tech stack that is much more nimble and able to ingest all of the data and analyze it much better. So that gives them a profound advantage. Revolut is now got about 60 odd million customers. Nubank has 60% of the adult population in Brazil. So these businesses are really showing the ability to scale and to appeal to customers. I think both of them have slightly different advantages to that difficulty to analyze. Nubank does a lot of credit, but the credit it does is quite short duration. So the ability to change course with macroeconomics environments changing is much higher. So they're not giving out 10, 20-year loans. Their sort of duration is just 4 or 8 weeks. So they're much more nimble in the ability to adapt to changing conditions. And Revolut's built a lot of its business so far without having to provide huge amounts of credit, but instead offering sort of payments, deposits, accounts, FX, and so on. And so they're being built and constructed in ways that are slightly different than traditional banks. And one way you could kind of tie it together is that they are looking at doing the most attractive and lucrative parts of banking. And then over time, we'll have third parties do the bits that they don't want to do.
Staying on finance, very simple question. Do you have enough exposure to Bitcoin? Tom, what's your thoughts on that area?
Well, I think that the biggest amount of progress over recent months has been in so-called stablecoins.
Yeah.
That is coins that are tied to the value of predominantly the US dollar. And that's a really interesting technology that is starting to find lots of use cases because it can take cost out of the payments industry. I think that we're following developments there very closely. We have investment in Stripe, which has a number of assets in this area. We're seeing companies like Mercado Libre deploy this technology. And so we're following that quite closely. On Bitcoin specifically, we have a holding in blockchain.com, which is one of the important companies in actually facilitating the public to get access to these technologies. But we don't want to speculate on the price of Bitcoin per se. That's not the objective of what we're doing. We're looking at some of the companies trying to build the infrastructure. I think in terms of the value of the asset, shareholders can invest in that for themselves. They don't need us to do that on their behalf.
No, perfect. We're coming up against time, so maybe just one to end on, which I'll maybe ask both of you. What company has surprised you most over the last year? Lawrence, do you want to kick off?
Yeah. I think there are a number of examples to choose from. But perhaps one I'd talk about is, I mentioned earlier about digital banks. And I think what Nubank have been achieving in Brazil has been far greater than I would have hoped. They are able to offer financial services that are cheaper, and they're able to offer them more profitably as a business than the traditional banks. And you're seeing that continue at scale. And you're seeing them now start to show signs of what they've achieved in Brazil, achieving in Mexico. And the most recent news is that, such as their confidence in their business model, that they now have plans to go to the United States and disrupt banking there, which is a massive expansion of their opportunity set. And I think one of the things we've talked about a bit over the last year has been world of opportunities.
Yep.
And I think it's just a sign that in all corners of the world, you can potentially have outliers that even in hospitable conditions can leverage some of the efficiencies to their advantage and potentially build really great businesses wherever they are in the world.
Tom?
Yeah, I'll pick a different one. What about ByteDance? ByteDance, the Chinese parent company of TikTok. And what is surprising about ByteDance to me is that it is now a huge business, comparable or larger than Meta Facebook, and yet it continues to grow incredibly quickly. And I just if you're expressing it in terms of surprise, sometimes I just can't fathom how a business of that scale is able to grow at such a rapid pace.
Yeah.
Until I look at my children who walk around with their devices like this, even when they're supposed to be eating or doing their homework.
So ByteDance and Nubank. We're just about out of time, so thank you both for your insights on a wide array of topics. So thank you to everyone who has attended today. We hope you found this year's digital conference insightful. A full recording of today's session will be sent to your inboxes, and it will be available on the website shortly at scottishmortgage.com. Thank you again for joining us.